That way we can share this with our members later on. But I think most of y'all know me. I'm Katherine Johnson, the CEO, President of the Richmond O'Brien County Chamber of Commerce, and we are glad that y'all could join us this afternoon. We're excited that Terri Denison with the Georgia District Office of SBA was able to join us today to give us a little bit of an update from SBA on everything that's going on. So I will let her give a brief interview of herself and kind of give us an overview of everything that's going on with PPP and EIDL and the other SBA loans. And then I do have a couple of questions that we received ahead of time, so I'll ask those. And then if you have any questions throughout the program, if you'll please put them in the chat box and we'll ask them at the end of the call. So Terri, I will turn it over to you. And again, I'm so thankful that you could join us today. So thank you.
I'm glad that worked out. Good afternoon, everyone. I feel like I've been talking literally all day, so I think I got enough gas in the tank for one more presentation and hopefully answer some of your questions and provide you updates, at least up to what I know. I always start off by telling people we literally worked on this as the airplane was going down the runway about to take off, hoping that we had all the nuts and bolts in, or at least most of them in, before we actually lifted off. So there's a lot of constant changes. Two sources that are good to keep in mind to get the latest information as we figure things out is one, of course, the SBA website, sba.gov/disaster. That's a landing page, and there's a section on that page with all things related to COVID-19 and the response to the economic situation as a result of it. The other website is U.S. Treasury, because we are working with them on implementing a lot of the relief efforts. And that website is treasury.gov/CARES, as in the CARES Act. They're constantly updating those sites. So after my presentation, I hope I can give you a framework, but then to get the most recent up-to-date information, continue to refer to those two sites. I'm going to start, well, I guess a little bit of background as far as status. Of course, the two main things that we had available to assist businesses trying to address their situation because of the economic downturn, because of the social distancing, shelter-in-place orders, et cetera, were, of course, the PPP, the Paycheck Protection Program, and then the Economic Injury Disaster Loans, or EIDL, as we call them, with the enhancement through the CARES Act of the advance, the EIDL advance. You may have heard it referred to as a grant, because I think in the original statute, that's what it was referred to as, but SBA and Treasury have decided to call it an advance. The EIDL became available maybe like mid-March. And then, of course, PPP became available on April. First day was April, I want to say the 4th. And within a matter of a couple of weeks, as you've heard, funds had been exhausted. And as a result, SBA was not taking any more EIDL applications. And also, we weren't taking any guarantee applications from the lenders for the PPP loans, because there was no funds. Of course, Congress has put together another package for another round of funding for both programs. The Senate passed it a couple days ago. We're expecting, I was checking my phone while we were waiting to see if the House had actually voted and passed that legislation. I think the vote is still up. I don't know when that's going to occur, but I would think it would happen sometime today. And then the president would soon thereafter sign the bill providing these additional funds. So given that timeline, I would be very surprised if we weren't back up taking applications for both programs by Tuesday. I figure they'll have the weekend to try and get everything together and test whatever they have to do, need to test, open, whatever adjustments they'd have to make to be ready to receive those applications. So I'm hoping Tuesday. What I'll do is I'll start with the Paycheck Protection Program, and kind of give you overview of it. And then I understand that people had particular interest in what you have to do to have the loan forgiven once been approved for the loan. And of course, that's one of the main, I guess the most popular, if we could call it popular, characteristics of this program. And what makes it so attractive in this particular time is the fact that the loan can be forgiven. So I'll discuss that as well. And then I can touch on EIDL if we want to, or just wait for the questions that you have specifically. Of course, with the Paycheck Protection Program, this is based on the SBA guarantee model, where basically the commercial lender that is authorized to participate in PPP makes the loan. They will actually fund the loan. Then they will ask SBA to guarantee the loan. And under this statute, oh, it looks like we have some excitement occurring outside, but they will actually apply to the SBA for a guarantee for that loan. And under the CARES Act, there's 100% guarantee by SBA, which is something very rare, because we never guarantee 100% of the loan to the lender. But under the CARES Act, it was done to hopefully make it more enticing for the lenders to participate and provide these loans. A commercial lender can be an existing SBA lender. So if they're already doing SBA guaranteed loans, they have that participation agreement with us, they were already automatically able to do this. Other entities that maybe did not have that existing relationship with SBA, there was a process by which they could become lenders for the purposes specifically of PPP. And you may have heard that some of those have now included the fintech type companies, which are non-depository, non-bank financial entities like Cabbage and PayPal and Square, Intuit, and other like companies have been approved to deliver these loans. One I know thing that's in the bill, and I have no reason to think that with this second round is not going to happen. Of course, there was a lot of concern about only the large lenders who are set up to do large amounts of loans, that are set up to do SBA loans all day, every day, had an advantage over some of the maybe smaller lenders that do not do as many SBA loans, or maybe have not even participated with us. In this particular legislation that's coming out, there were some carve-outs for participation. So I believe it's like, and I'm trying to remember the numbers from memory, but basically I think it was like maybe 20 or 25 billion for small lenders, and those are lenders with assets less than, I think, $10 billion. Another cut for medium-sized lending institutions, which would be asset size of $10 to $50 billion. And then everybody else would be considered large. So they hope that in doing that, some of the smaller lenders that tend to work with smaller communities, rural communities, underserved markets, that they would have an opportunity to deliver this program to those particular constituents. So that is something that has been added to this reiteration of PPP that should be approved here shortly. The whole idea of it, Paycheck Protection Program is just that. The emphasis is on the paycheck, helping businesses to be able to maintain their employee staffing because of the downturn, because people are not utilizing the services of these businesses or coming in to buy the products of these services. Keeping those people on board and at the levels of compensation that they were getting prior to the situation arising. So the idea is the proceeds of the loan would be to cover payroll and related benefit expenses first and foremost, but also their allows for some other business-related expenses, such as rent, if you're renting your space for your business, if you're purchasing the building in which your business is housed, it could cover the interest payments on that mortgage. It would not pay the principal, but it would pay the interest. Utility costs, so water, lights, sewer, gas, communication, both landlines and internet connection. All those things would come under utilities, and then maybe any other business-related costs. The caveat is, and one of the keys to having that loan be forgivable at the end would be that at least 75% of the amount of the loan to be forgiven had to be for payroll and payroll-related expenses. That's very key. The point of the loan is to cover payroll expenses for a period of 8 weeks from the time of the initial disbursement of funds from the approved loan by the lender. Okay, and so that's kind of the window. And if you figure out, well, how do you determine that? You look at your average annual for the past 12 months. There's a couple ways to do this. The past annual average payroll cost and multiply that by 2.5 would give you roughly how much that loan would be for. And then the idea is to be able to show the lender at the end of that period of time that you have maintained your payroll costs and that at least 75% of the proceeds of the loan went to payroll and related cost. It can be prorated and be less than than the 100% forgiven if that did not occur. If, for example, because you either reduced the number of employees or you kept the same number of employees, but maybe you reduced their hours, and that results in the payroll cost during that 8-week period to be less than the comparable period before this all went into effect. And we kind of use February 15th as the starting point for the period of time we're looking at. Then either one of those things can result in a reduction in the forgiveness. So it's not all or nothing, but a portion, whatever is less than what you started out with on the payroll, that part would have to be repaid. And then, of course, if you used the funds for something that's not eligible for PPP, or more than 25% on those even eligible costs that I've mentioned that aren't payroll related, if it ended up being 35 or 30%, then that portion would be set aside from the forgiveness calculation. Okay. At this point in time, there was at least an attempt, I'll put it that way, to phase in the businesses that could participate. So I think the first wave on April 4th was basically incorporated businesses, LLCs, I think maybe sole proprietors were in there. And then the following week on the April 11th was when your 1099, your independent contractors would be eligible. There's no indication that that's going to be the case with this second round. So at this point, whoever is eligible will be able to receive funds once they become available. So there's not going to be a phase in like there was initially on that. Trying to think if there's anything else, just in terms of some of the other conditions. The portion of the loan that's not forgiven, you have 2 years to repay it. And that's after a 6-month deferment. So there's an automatic 6-month deferment period for any amount that has to be repaid. And then after that, you have 2 years to repay. The interest rate, which is another thing that make people really want to try to obtain this particular form of assistance, is the fact that it's 1% interest, and that there's no penalty for early payment. So if you could pay it off earlier, you can do that. There's no guarantee personal guarantee being required, like would often be the case with our regular SBA lending, no collateral requirements and no fees. So that's another thing we're really asking people who are borrowing money through PPP. If anybody, the lender or a third party, try to charge you fees, they're not to charge you fees. Those are things that would be covered from funds from the CARES Act that SBA would cover on behalf of the borrower. So if anybody tries to slip in a fee on you, then you need to report that. You can report that to us, and I'll give you some contact information on that, but that definitely should not be happening. I think those are the main things, and there may be more specific questions people have, and it's probably more important to entertain those questions rather than trying to cover everything up front that I think should be covered. I will say one thing about EIDL, by the Economic Entry Disaster Loans. Of course, that's not unique to CARES, the CARES Act. They have been around for decades. It's one of the standard offerings that SBA has through its Office of Disaster Assistance. When there is a declared disaster, this is very unique in that we've never had a nationally declared disaster for which the EIDLs could be used. Usually it's a localized type of disaster, be it natural or even person-created disaster. Usually it's very localized, and you're talking about counties. This is the first time that SBA has ever had a national declaration. So that did prove to be very challenging in terms of gearing up to take applications from all over the country at one time for this one specific situation. And of course, the first time we've ever had a declaration based on a medical situation such as a pandemic. This program, the loans are not forgivable, but they're up to $2 million, up to $2 million, and basically covers expenses that you would have that you would need to continue to cover, even though you're not maybe generating the revenues and getting the income that you normally would. So definitely your fixed costs would be covered by it. Once again, personnel, payroll related stuff would be covered, accounts payable, anything that would normally be a regular expense of the business. That's what we covered. The interest rate is higher. It would be for businesses 3.75%. That's set by statute periodically. And I think they had just set the rate, a few weeks before this occurred. There's no prepayment penalty for those loans. So even though it's a 30-year term, you can definitely pay it off sooner without any issue there. If it's a loan under $25,000, then there's no personal guarantee required. And for this particular situation, collateral, they normally try not to take personal collateral anyhow, business collateral first, if there be any. And the policy has always been that if there isn't, that's not a reason for decline. In this particular situation, there's pretty much saying that if the loan is under $500,000, then collateral really is not going to be pursued. So it would have to be over that amount. I'm trying to think if there's anything else on that. So that's basically how the EIDL works. Now, under the CARES Act, there was a provision made for the EIDL grant or advance. And the idea, at least in principle, was to be able to provide money to help tie the business over as the EIDL application was being processed. Now, probably if you've tried to apply for this, you realize that didn't quite work out that way. Excuse me. Didn't quite work out that way. So sometimes the advance is coming at the same time, or the main loan is coming before the actual advance. So I'm hoping that with this little down period we've had for about a week, there's been some catching up of the application process, and hopefully a little more order has been brought to it. But the thing about the advance is, even if you do not get the EIDL, you do not have to repay it back. And that amount is up to $10,000. I know that there's things floating out saying that everybody was going to get a flat $10,000, and that is not correct. It's the statute itself always said it would be up to $10,000. And basically what the agency is using to determine the up to, if it's not going to be 10,000, what is it going to be, is roughly $1,000 for each pre-disaster employee that you had on board, with the maximum being 10,000. You have to apply. You cannot separate the two. People have tried to submit an application for the grant or the advance without the EIDL application. You cannot do that. You can obtain an EIDL loan without the advance, but the reverse is not true. So if you didn't get anything back, or people can't find the application for the grant, it's probably because it's not attached to an EIDL application. So that's very important. So those are the two main things that we have available. One other thing, I don't know if we have any current SBA borrowers, but there were provisions to cover the debt service on the SBA loans for existing borrowers, and for those who become borrowers up to, I believe it's September 25th of this year. The monies would cover the principal, the interest, and any fees. We've encouraged lenders before any of the funds came about through CARES or other mechanisms that we give them unilateral authority to defer payments on SBA debt up to 6 months, and that could be interest and principal. And many of them did that. If that was a situation where someone got a deferment, the deferment period would complete, and then the debt relief would kick in. And there's not an application process from the SBA borrower to put in or to apply for the debt relief. That's something that's going to automatically happen because SBA and the lender know who those borrowers are and can match those loan numbers to payments that the Act afford these borrowers. So that's my spiel for right now. I'm glad to take any questions, or if there's something I've forgotten, point it out.
I think we've got a couple questions, and then if you've got another one, just put it in the chat box and I'll read it out just to keep background noise down. One of the first questions, I kind of want to go back to something that you mentioned, is the forgiven portion. So I know 75% of the amount has to be used for payroll expenses. What kind of documentation, if you know yet, is going to be required? And what does that process kind of look like? Do you go back to the bank, the lender that you initially applied with? Are you going to, what are your kind of recommendations on that? I've heard some bankers recommend, the money you receive from PPP, put it in a separate account so you can track it and document it. What are y'all recommending on that side, if you can make a recommendation? And what kind of documentation do business owners need to be prepared to have after that 8-week period, so that they don't get in a spot where they thought they had everything together and now it's not forgiven?
Yeah, basically, and they're actually finishing up guidance on this, so that should become available here pretty soon, because we're getting to the point in a few weeks, you're going to have that first batch of PPP borrowers having completed their 8 weeks and needing to look at the forgiveness. The main thing would be for whatever, like for your payroll, it could be, if you use a payroll service, the records of that payroll service to show what was paid out. If you use QuickBooks or whatever to track your payroll costs, as long as they're identifiable, clear, who you paid what, those are the type of documents that you need.
Okay.
And then for the other stuff, you would just have, pay where you paid your utilities, paid your mortgage or your rent, etc.
Okay. So really just be prepared to keep receipt and documentation of all that.
Right.
And I think, a couple of our bankers that I've spoken to locally have been recommending that our borrowers or business owners put that funding into a separate account so it's very clean. So I think that might be a good idea so that, you don't have a ton of transactions, but whatever is coming in and out is clearly used for those items. The other question, and we've got a couple more coming in. So I know last time, and you briefly touched on this, I know last time independent contractors it was like you said, it was phased last time, and independent contractors couldn't apply until later, which I think ended up being like right before the funding went out. If they submitted an application last time, are they still in that queue, and are they going to start with those first, or how is that going to kind of work? And then, like, I think you mentioned this, but it sounds like it's not going to be phased this time, and it's just kind of first come, first serve, no matter what type of business you are.
Okay. In terms of applications that were in process, from everything I've been told and have seen, is that they basically froze in place.
Okay.
There's two parts to the transaction. The borrower submits the application to the lender, and they make an initial approval, and then the lender contacts SBA with an application for the guarantee for the loan. So in a lot of cases, it may have gone through the lender's entire process, and then depending on when the funds ran out relative to that process, those lenders may have held those applications. If they had gone over to SBA maybe a day before the funds ran out and they're on our side, then they're just there in queue. So
Okay.
it really should not be a case where someone has to reapply
Okay.
once the funding is available again.
Okay, great. And kind of to follow up on that, with the independent contractors, like a 1099,
Mhm.
I think in the past, because it was phased, a lot of bankers and CPAs said that they didn't have guidance on what was going to be needed for that application and submitting that. Has that been cleared up with this time off so that they can go ahead and get that in?
I know that in the frequently asked questions that Treasury publishes on its site, treasury.gov/cares, there are some updates with regards to 1099 and also sole proprietors who do not take a salary, but the distributions is how they contribute. How they compensate themselves. And I think people like LLCs may have the same issues with members who, rather than take, a salary, they just take a distribution that's on their Schedule K. There has been guidance on what those individuals should do and provide.
Okay, great. Perfect.
Yeah.
And then this question was saying, was the idle capped at 25,000? I think I can answer that. No, 25,000 is the max for no collateral. So I believe that's up to 2 million. But the 25,000 or less, you do not have to put up any collateral. So I hope
Or
that
personal guarantee.
personal guarantee. Okay.
Right.
Right. So you don't have to, yeah. Okay. And then can bonuses be included in the PPP loan for forgiveness?
Ooh, and I'm trying to remember. I may have to refer to the cheat sheet here.
Was
I
is
know that the main
PPP?
salary.
Go ahead. Sorry.
No, I was going to say, I'm looking at my little cheat sheet here. I know, of course, salary, wages, benefit costs are included. But and I'm trying to see, it does not, it's interesting, it does not mention bonus.
Is PPP the one where it's maxed at 100,000?
Yes.
Okay. So I'm wondering if that maybe.
Where it would come in.
Yeah.
Now that's possible because other costs, like for example, one question is, well, the withholding, what I would withhold for your taxes or unemployment, does that count? And they do not.
Okay.
Anything up, you cap out at 100. So say you have a salary of 125,000. The salary for the purpose of PPP would be 100, but then you'd have the other costs on top of that. It would not be included in that base salary or compensation amount.
Okay.
So it is possible that the bonus could be in the other category. It just would not be counted as part of the
The payroll
100,000 threshold
part.
or
Okay.
below.
Okay. And then the EIDL loan, you do apply directly through the SBA on their website. Is that the one
Yes.
that's on the sba.gov/disaster?
That's correct.
Okay. And we actually applied for that. It's pretty simple. You go through and enter in the figures. And then this is just to confirm the 10K, if you get up to that amount, does not have to be paid back.
That's correct.
And just to clarify on the 10K too, I think there was a lot of confusion initially. It's up to 10,000, but it's looking more like it's $1,000 per employee is what it ends up breaking down to.
And that is correct.
Great. Any other? Let's see. Okay, so one more about the 1099. So it says the banks are willing to take the 1099 applications, but they're saying that they're not allowed to submit them to SBA yet.
Now that could be a couple things, depending on if it was in early April, it could have been in that time frame between April 4th and 11th, because
Okay.
April 11th is when the 1099s were able to enter the program or submit applications. If it's past that time, it could be a matter simply of the funds ran out, in which case that would apply to everybody, not just the 1099s.
Okay. But I think, like you mentioned, it sounds like they're not going to do the phasing this time. So if you have an application in, it should be able to go in with the rest of them. Okay, great. Any other questions from anybody? That's the last one I have in the chat box. We'll give you just a couple seconds to type anything in if you've got another one.
One thing I will bring up, because this does come up as a question a lot, can I have an EIDL and a PPP loan, both at the same time? The answer is yes, you can. However, the key is you cannot use the proceeds of both for the same exact use. So granted, with EIDL, you could use it to cover payroll as well as obviously PPP. You can cover some overhead costs with PPP, 25% or less of the loan, same as you would do with EIDL, except with EIDL, there's no allocation of which percentage of the funds you can use for which purpose. So one thing you might do is, if you have a lot of employees, for example, relatively speaking, then maybe you use all of your PPP for that purpose. And then any overhead or non-personnel related costs, the EIDL could cover. So it'd be a matter of kind of looking at the composition of your business in terms of employees and costs, and deciding from that how you would apply each program.
Great. No, that's awesome information. So, well, good. Well, if we don't have any questions, we will keep y'all updated on the vote at the House. As soon as we hear anything, we will push that out to y'all. And hopefully this will get refunded, and hopefully some more small businesses and micro businesses can get some funding. Terri, I did think of one more question, and you may not know the answer to this, but actually I think you kind of touched on it. Has there been discussion on setting aside funding for actually what we would call micro business, instead of just small business? Because I know y'all define small business as 500 or under. Whereas
Yeah.
like in our community, most of our businesses are 1 to maybe 25. Really a majority of ours are 1 to 10.
Yeah.
And it sounds like they have split that up to how they're funding the lenders, or how the breakdown's going to the lenders.
Yeah.
And I think that must be to kind of help that. So I
Yeah.
think, let's see, I just want to make sure. I think you were saying, let's see. So smaller banks like $1 billion and less, or 10 to
Right.
10 to 15. Okay. So that kind of answers
Yeah,
my questions, but just want to reiterate that for people.
Yeah, but there's nothing specifically in the statute that looks at set-asides on the business side by business side.
Okay.
By business size.
Right, but if it's broken down to different bank sides,
Lenders,
they're usually they're tailoring to different size businesses.
Right.
Okay, great. Hopefully that will help a little bit with where that money's going. So, well, Terri, we thank you so much. I know it's after 5 o'clock on a Thursday, but we so appreciate you taking the time out of your day to answer some of our questions for our members. And we did record this, so we will share it with the rest of our membership, with the Richmond Hill Bryan County Chamber. So thank you again. And if any,
I left everybody my email.
Great. Yeah, and we'll post that also in our message that goes out with this video, so that if they have any other specific questions, they know they can reach out to you directly. But if anyone else doesn't have any other questions, we'll let Terri go. And if anybody wants to stay and hang out, we'll keep doing our little virtual networking for the afternoon if you want to stay. So, Terri, thank you again, and hope you have a great evening.
You too. You all take care.
Thanks.
Bye.
Bye.